Rising debt, meaning credit card debt, inflationary debt, expenses, is that happening to you? But you're sitting there as a homeowner and you have a ton of equity in your house and you're thinking about accessing it, but seriously, you're probably under a 4% interest rate on your mortgage now and you can't fathom refinancing out of that. I get it, and you are not alone. Statistics show that over 60% of Americans are at a 4% or lower interest rate on their primary mortgage. So when I say you're not alone, trust me, you're not alone. But there are solutions out there to consider. And if you bought your house prior to 2021, chances are you are sitting on a ton of equity. Now, equity is your money, but it's tied up in the house. So think of it this way. If your market value or the appraised value of your home today is $500,000, and let's say you owe $300,000, then technically you have $200,000 of equity that you could potentially use or receive if you sold your house, minus commissions and costs and all that kind of stuff, but you get the picture. Now, if you've got rising credit card debt, which we're seeing on a rampant level nationwide, at an average of 24 to 26% interest rate, tapping into that equity may be something to consider. But again, going back to that low interest rate, you're just like, how do I do it? Well, there's two ways. One, you can consider a home equity line of credit, or we have a new program called the Equity Access Program that is a fixed rate, closed-end second mortgage that allows you to access some of that equity. Now, let's be clear. Both a home equity line of credit and a closed-end fixed rate second, those are both second mortgages, which means they're taking second lien position on the title to your home. So they're going behind your first mortgage, your primary mortgage, and that mortgage is not being touched, it's not being refinanced, it's still there. Now, when we think about the pros and cons between the home equity line of credit and the closed-end second, a lot of people get concerned about the home equity line of credit because most often it is based on an adjustable rate. And what drives that rate? The Federal Reserve and all of these actions that they're taking. So as the Fed funds rate increases, then the prime rate increases, which means the interest rate on those home equity lines of credit are likely increasing. Now, equity lines of credit are great if you've got a long-term project that you don't need all of the money immediately. They bill at an interest-only payment. So for some people that works, but keep in mind that can also be a negative because that means if you're just paying the interest that's due on that bill every month, you're not paying towards the principal. So don't fall into that fallacy that that balance is going anywhere unless you're focused on paying towards the principal when you have a home equity line of credit. Now, this new program we have called Equity Access is fantastic because it kind of counters some of the concerns of a home equity line of credit in the sense that it is a closed-end fixed interest rate amortized anywhere over 10 years to 30 years, which helps you kind of position that payment to fit your budget, and that monthly payment is a principal and interest payment. So every month that you are into that term of that closed-end second, your balance is going down. And it also gives you the security of future rate increases that the Fed may or may not be doing. Nobody knows at this point. Now, how do these programs work? All second mortgages, whether it's the home equity line of credit or whether it's a closed-end fixed rate equity access loan, they're all going to be based on the market value of your home, and the lending guidelines aren't going to allow you to access 100% of that equity. They're going to allow you to access a portion of it, and the guidelines will differ based on the program. But keep in mind that it's not just your equity position. It's going to be your income, your credit, your ability to document your income. If you'd like to see how this option could help you access some of that equity to cash flow monthly or pay off some of those credit cards, or the other big thing right now is just home renovations. We have a lot of people that are thinking, hey, I like my house, I just need to update it. This can also be used for that type of need. Feel free to reach out, schedule a 15-minute consultation with one of the KellyZtilowGroup mortgage advisors, and we would love to put a strategy together for you to consider. And we'll dive into it together, listening to your goals and helping you evaluate, is this a good strategy for you, and does it help you achieve those goals? Heaven knows, you don't want to just take out a mortgage if it's not helping you get to where you want to go. Thank you so much for watching. Don't forget to subscribe. Honestly, when I see those little subscriber things come through, it just fills me with so much joy and excitement to bring more mortgage education to you all. Thanks for joining.